The Dash cryptocurrency is outperforming massively. The question is why? Who's buying here? Who's selling here? Let's have a look at the on-chain data. Let's try to figure out what's behind the rally, and let's also find out whether or not it still makes sense to buy Dash right now. Dash is an inflationary currency. It's one of the OG Bitcoin forks. It has been around since 2014. And because of the inflation, there is some long-term selling pressure. We peaked in market cap at 11.5 billion at the end of 2017. Now we are at only 0.9 billion. In terms of price, we peaked at $1,500. Now we are at $71. So the market cap used to be 13 times larger than today. The price, however, used to be 21 times larger. So over the very long term, token inflation does matter. If the demand doesn't grow at the same rate as the supply over the years, then this does have an impact long term, of course. We are looking at a 50% relative decline over the span of 8 months. But really, what we are interested now is the recent rally, right? It's a 73% rally in the last week. Now, I always like to look at relative valuation charts. US dollar charts aren't really that helpful because altcoins tend to go up together with Bitcoin and Ethereum. They tend to go down together with Bitcoin and Ethereum. So when we just look at US dollar charts, we're essentially just looking at the macro environment. What we are much more interested in is whether or not it makes sense to buy an altcoin over, say, Bitcoin or Ethereum. Do we see long-term outperformance within the altcoin market and versus Bitcoin and ETH? It's all a question of opportunity cost. And what we see over here, that's the Dash chart relative to the others market cap. So the market cap of all the altcoins that are not in the top 10, and Dash is included in that metric. Dash tended to underperform the other altcoins massively. So over the course of the last 6 years, the underperformance was 99.4%. And this is our recent rally. This is the potential breakout. Now the trend wasn't as consistent as it initially seems, right? At the beginning, we also underperformed, but then came a breakout again. And this sidewards trading range lasted for 2 years. We can also zoom out a bit further and draw this line instead. Now we've got the breakout here. And we've never seen that much relative outperformance in Dash. Here is Dash relative to Bitcoin. That chart is a bit more consistent in its underperformance. We do have our breakout, but just because we are breaking out doesn't mean that the overarching trend has to also turn around, because we have seen similar breakouts in the past, just to the other direction. Really, Dash doesn't see that much adoption, unfortunately, so that's not what's driving the rally. Here's the TVL, or the total value locked on the blockchain over time, measured in US dollars, and here's the same TVL measured in Dash. So the trend is definitely not anything to be too optimistic about. Really, what I think is going on here is that enough people noticed how Dash was doing very poorly long term, and they bet on falling prices via the perpetual futures. So what we're seeing here likely is a short squeeze. So the market makers manipulating the price to the upside to liquidate that speculative capital. Have a look at the trading volume in the last 24 hours. On the spot market, there was only 158 million. But on the perpetual futures market, so on the levered bets on the price, the derivatives market, we had 727 million of trading volume, much more than on the spot market. We have seen with this recent rally how more and more people were betting on falling prices. So we had negative funding rates. It cost money to bet on falling prices of Dash. And that's not the usual development, right? Most of the time it costs money to bet on rising prices. Once it costs money to bet on falling prices, there are more pessimistic players in the market, and that then incentivizes market makers to buy up the token, to push up the price. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. Just have a look at this long-term Dash price and see how this is correlated with the open interest. How many bets are currently made on the price? When the price is high, there's a lot of bets on it as well. When the price is low, there's not so many bets. And currently, we are historically rather at an elevated level. We have been higher in terms of token interest, so we have been all the way up to 70 million. Currently, we are at 30 to 35. So there is the chance of another short squeeze. We could see the price again rise by another 50, 60%. But we have already turned around at a similar level already at current prices. The trading volume recently is quite inflated as well. And again, there's positive correlation between trading volume, attention, and price. And so there's a uniquely interesting development with Dash on the 10th of October. If you remember, on the 10th of October, there was a flash crash across the altcoins. Many altcoins lost a lot of money, and many people that bet on rising prices through the perpetual futures, they lost everything. So that's this bar over here, the 10th of October, the liquidations chart. But there is something interesting here. The short and long liquidations had been almost equal for Dash. This is very different to most other cryptocurrencies. For most other cryptocurrencies on that day, it was mainly the longs that got liquidated and the shorts didn't get liquidated at all. Have a look at this chart. This shows the beginning of October up until today. Where was the flash crash here? This is the Dash price over time. Compare this with the altcoin market cap. This was obviously the flash crash, right? The altcoins on average went down by 50%. The 10th of October is over here on that chart. So Dash also went down a little bit, but much less compared to the rest of the market. And so now, as the price is rising, we see a lot of short liquidations. So a negative day when everything is going down didn't create that many liquidations on the long side for Dash. But now a day where the price is going up creates much more short liquidations. So really, even though the funding rate most of the time is positive, it seems to have been the market makers that owned most of Dash, and the retail investor that's more likely to get liquidated, they were betting on falling prices. And the reason why they did this is, of course, this chart here. And so now we saw a lot of shorts getting pushed out of the market, but there is a risk of another short squeeze because still the funding rates are negative. There are still some shorts that hope for the turnaround here. So I'm currently not yet betting on a falling Dash price. I do believe there's a good chance that Dash long-term continues to underperform. Again, the token is inflationary and nobody uses the blockchain. But there is the risk of further manipulation. I think it's better to wait it out and see when things calm down, because very likely they will calm down again and very likely the long-term momentum will continue. Are we going to turn around today? Will this be tomorrow or the day after tomorrow? Who knows? But at some point, when now the market makers are buying up the supply to liquidate all of those shorts, they want to offload that supply long-term as well. Is there a chance that we double from here? Is there a chance that we even triple from here? Potentially. The market cap is still below 1 billion. And sometimes those tokens get pushed to 3, 4, maybe even 5 billion. I'm not betting on the long side though. I think it's better just to wait until the dust has settled, when there's some sideways trading activity, and then the trend is my friend. Then I just bet on the long-term development to continue. Now there's a very interesting misconception with altcoins. Have a look at this chart here. This shows total 3 ES divided by Bitcoin. Now what does this mean? Total 3 is the market cap of all cryptocurrencies that are not Bitcoin and Ethereum. ES means that we also exclude stablecoins. So this is all of the volatile altcoins that are not Bitcoin and Ethereum. And we look at that market cap relative to Bitcoin's market cap. So how are the volatile altcoins doing relative to Bitcoin? And it seems like this is trading in a range in the last 8 years. If we just look at the prior year, we also seem to just performed in the same way as Bitcoin. But clearly that is not true. Have a look at the performance of these smaller altcoins in the last year. Pretty much everything is red while Bitcoin went up. The key to the puzzle is to understand the difference between market cap and price. This here is an example of WorldCoin. WorldCoin over the years saw an increasing market cap. It went from a peak of 1.5 billion to 2.5 to more than 3 billion. So WorldCoin tended to grow in market cap. But have a look at the long-term price chart. It looks very different. WorldCoin's price peaked at close to $10 and is now below $1. There can be a massive disconnect. In this chart here, it just looks at the altcoin market cap relative to the Bitcoin market cap. And this is true for many altcoin related metrics. It's true for the others market cap. It's true for the others dominance. It's true for dominance charts in general. When we look at the Bitcoin dominance or the Ethereum dominance, we are just comparing market caps. We are not comparing prices. Even when the Bitcoin dominance stays stable, Bitcoin very likely has outperformed most altcoins because altcoins might have been stable in market cap, but they might have gone down in price. This effect that we see for WorldCoin is very typical for altcoins. Now here's the circulating supply of WorldCoin. Again, just an example of what's going on with the market. We had 500 million WorldCoin at launch, and that more than 8x'd over the span of 2 years. When we look at the entire altcoin market, at least the tokens that are tracked by Tokenomics.ai, we've got weekly unlocks of roughly $1 billion. So if the demand for the altcoin market is below $1 billion, if the altcoin market doesn't grow that much every single week, then the price goes down. Because all of those unlocks, they are tokens that get allocated to the early investors of the altcoin projects. They get allocated towards the founders. They get allocated towards the insiders. So they are cashing out at a rate of 1 billion per week. And if the retail investor doesn't buy at the same rate, then price goes down. So here is an example. This is WorldCoin in US dollars. Here is WorldCoin relative to Bitcoin. So much more consistent underperformance. Now there are two potential takeaways from this. The first one would be to just completely stay away from altcoins altogether. Altcoins are rigged, altcoins are through dump on retail investors. But the second potential takeaway is to maybe flip this thing around. So we are betting on falling prices of WorldCoin, while at the same time betting on rising prices of Bitcoin. So when we flip this chart, we get this here. This looks quite interesting, doesn't it? Since launch, Bitcoin outperformed WorldCoin by 836%. So that's the kind of performance we are looking for. The problem, of course, is volatility, especially here at the end. So WorldCoin occasionally does have positive news. It still has development. It's still an active project. And so a strategy like this can still lead to temporary drops of 55%. Despite the long-term outperformance. So the idea to bet on token inflation structurally is a good one. The idea to bet on falling prices when things look like this is a good idea. But risk management is crucial, and we have to look at assets that don't have that much more active development, where we don't see any positive news around the project anymore. Here's an example I like to give regularly on this channel. This is Bitcoin relative to Balancer. Balancer also has a high token inflation. And yes, there can be some drawdowns along the way as well, but they're not 50%, they're only 30%. And on a logarithmic chart, this looks much more manageable. And so this strategy doesn't just work in theory, it actually does work in practice. Let me show you how. When we look at this relative valuation chart of Bitcoin to Balancer, and we compare this to just buying and holding Bitcoin, so that's now the line in orange, we can clearly see how betting on the differential, so betting on falling Balancer prices by betting on rising Bitcoin prices, has a way better long-term risk-adjusted return. And so I followed this strategy for the last 4 years. This is a monthly chart. Had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices at the same time, I got the performance here in black. Now the problem is, just because I make profit with that strategy doesn't necessarily mean that you have to make profit with that strategy. But I do believe in the strategy that anybody can mirror similar performance. What we've got over here is a copy trading vault. So the premium members of this channel had the possibility to invest in a capital pool. That capital pool is closed until the end of the year. But anybody that deposited in July of this year is now up roughly 20%, while Bitcoin since then went down in price. Of course, the massive market disruption that we saw recently helped us as well. It was actually the best weekly return ever. It brought us more than 9%. Most others got wrecked, but we made money. And so I made several videos on the topic. There's one video explaining the copy trading vault, but again, that vault is closed until the beginning of the year. But here are the two more important videos: using perpetual futures to bet on relative valuations, and risk management with relative valuation bets. Risk management is extremely important, because if you don't know how to do that, you get wrecked during volatile times. You don't make money. So here are the two videos. This is 34 minutes in length. Here's the other video, 28 minutes in length. And once you've watched those two videos and you've joined the premium groups, I will share my favorite trade with you. So the favorite trade will look very similar to the Balancer trade that we looked at if you are not making money with that favorite trade after holding it for 1 month, I will refund the premium membership fee to you. So really, you are not risking those 125 US dollars. If you're not making money with the trade, you just get this refunded. I will not ask any questions. If you want to be part of the next copy trading vault and you don't want to make the trades yourselves, you simply just want to deploy capital, then feel free to check out this video over here. This was the introduction to the vault from July. And feel free to consider to sign up for the annual membership, because the yearly subscribers, they get access to that copy trading vault that currently is closed. Of course, you can simply start out with monthly, start the trading yourself, and then swap to the annual membership later on. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. So next time on YouTube, or see you in premium. Cheers.